capital investment and angel and private investment. I dropped my entire business, advisory business, to go full blockchain. There's much more adoption in the US than any other place in the world. And then if you look at second, third, and fourth, those are also more developed countries. You have London, you have Israel, you have, certain parts of Europe. The adoption from a grassroots perspective is greater percentage-wise and probably velocity-wise in places like Central Africa and Asia. Okay, but from a raw perspective in terms of dollar users, it's the US first. Now, the value in the US and the ultimate value.
We have the most money too.
Excuse me?
We said we have the most money too. I mean, it makes sense that we would.
Even if you normalize it for economic value, you're still putting more in. The biggest, by far, the biggest attribute of the Bitcoin blockchain is the ability to do a zero trust transaction. That means I can sell my car to you. I can take my Bitcoin, I can lock it into a US dollar value. I can sell my car to you. I can send you the money before you even send me the car. And I don't have to worry about the transaction, because if you don't send me the car, you can't spend the money. So now you have every single economic incentive to send me the car. The reason why people and entities defraud each other primarily is economic incentive. They defraud each other for economic gain. Bitcoins or any blockchain zero trust attributes take the economic incentive to defraud out. So there's no reason to cheat. You actually lose money if you cheat, if you escrow the funds. Now there is another reason to defraud, and there's a strategic reason. And that's if, let's say, God forbid, Bank of America wants to stop out my startup because I'm going to take over the Merrill Lynch function in prime broking. Well, they can spend an enormous amount of money to put me out of business and take a loss, but they're taking that loss because long-term, strategically, there's a reason for them to do it. There's actually reasons. You can actually use blockchain technology to get around that as well, using the consensus network, but that's a long conversation. But in general, that's by far the ability to do business with a total stranger without trusting them means that business in general takes a totally new direction. You no longer have to borrow, you don't have to spend nearly as much energy, time, and resources on due diligence. The court system doesn't come into play because it's not needed. You write a smart contract, the smart contract is unbreachable, self-executing, self-administering. So once you agree to it, it happens.
But that is the value of the blockchain technology. That's not, again, what is the value for us? Switching is in that delta there, but where's I guess because our system works, we're less motivated to do that versus another.
But the definition of system working.
Yeah.
Let's take a look at Lehman Brothers. Did the system work when Lehman Brothers went down? Take Bear Stearns, Washington Mutual, MF Global, Greece, Portugal, Ireland. General Growth Properties, the second largest, after going for a long time.
No, but those companies going down was not a result of not having a trusted ledger.
Yes, it was, because they had a trusted ledger. Lehman Brothers could not mislead you as to the value of their balance sheet, and the understatement of liabilities relative to cash flow assets. That is the exact point. If the ledger is revealed, right, and cannot be altered, you can't lie about it.
Let me just interject for a moment. In my presentation, I'm going to talk about how the system is failing in a very systemic, very macro way. I mean, I agree with Reggie that
Which system is failing?
the monetary system. I agree with Reggie that we had a bunch of companies that failed, and I'd love to use the Bear Stearns stock price in one of my, I don't have it today, but in some of my charts when I talk, because the stock price was like $70, and then it was like $3. It teleported. It wasn't a decline. It was a discontiguous.
And they had an investment grade rating from almost every
But
single
until 2 weeks before BK, it was investment grade.
Well,
And so
but that's also the fine line between liquidity and solvency. I mean,
but I'm just saying, from
from
a systemic perspective, that you had something that was considered to be an investment grade bank to bankruptcy over such a short period of time. It got inside the decision loop of the ratings agencies. It got inside the decision loop of the investors. There's something wrong there, and it isn't merely a bankruptcy.
Right.
Like if a store in the mall goes bankrupt, okay, that's a bankruptcy, and the investors suffer and nobody else suffers. The failure of Bear Stearns and Lehman Brothers was more than just simply, okay, a company in a free market went bankrupt. it's emblematic of something much, much deeper than that. And yes, it gets to liquidity risk, it gets to duration mismatch, it gets to unrealized losses that they weren't marking on their books. There's all kinds of things.
Which is impossible. I can tell you a personal story. On January 8th, I published a report, like a 30-page report, saying that is this a breaking of the bear? And basically said Bear Stearns was out. The vast majority of the emails that I got and calls came from Bear Stearns managing directors. Bear Stearns had a very, very aggressive vesting schedule. Basically, they had almost a cliff. So you get your stock options vested sometime in the future, and you don't get a little bit at a time. They were very aggressive.